So let's go on to the next slide. And this is an example from last week. Actually, it's almost 2 weeks ago right now. But once again, I isolated the cash values. You'll see that the January 22nd cash value was $502.35. February 23rd, which is 1 month and a day, its cash value was $502.49. So we were 14 cents off. It doesn't get much closer in OEX cash than 14 cents between two different time periods. So really what we're looking at is a butterfly, broken wing butterfly, over a 1 month and 1 day time period. On January 22nd, you could have bought the 500 put for $16.75. It would have cost you $16.75, so it's a debit. You could have sold the 485 puts for $11.75 2 times, which comes out to $23.50. And you could have bought one of the 460 puts for $6.75. That's a debit. In other words, this broken wing butterfly would cost you nothing. And that's roughly what we average. Excuse me. That's roughly what we average on our broken wing butterflies. Is we usually put them on for 0. That's the purpose of the broken wing butterfly. Remember, as I stated at the beginning, the downside to butterflies, the reason why some people don't like them is they pay this big debit for them. It's relatively small compared to the reward they have, but it's still a big debit if it expires worthless. Then the spread expires worthless, and they're all disenchanted with this strategy. And then you get two traders together, one screaming adamantly about how great butterflies are, and another one screaming just as adamantly how bad they are. It usually comes down to if you made money on it, and if you lost money on that debit, if you just keep watching debits expire. Here, this broken wing butterfly is trading for 0. So if it goes out worthless, guess how much you can lose? 0. Now we look at what happened over 1 month, and we see that the 500 puts went from $16.75 to $7.90. The $11.75 puts at the 485 strike went down to $3.90, and the 460 puts that were originally at $6.75 went down to $1.38. And now the butterfly is trading for $1.48 debit. Now don't get confused here. This does not mean if you owned the spread, you would have lost $1.48. Again, you have to back up. Anytime things get a little bit confusing in trading, just back up and work it through verbally in your head and say, what would happen if? In this case, what would happen if we decided on February 23rd to buy the broken wing butterfly? We didn't own it and we wanted to buy it. It would cost us $1.48 to put it on. But had we bought it back in January 22nd, we would own it, and we could sell it out. So if someone's willing to pay $1.48 for this broken wing butterfly, and we can sell it out to them and receive $1.48, what's really happened is the butterfly that we put on for 0 is now being sold at $1.48 credit. We made $1.48, and what has happened? Nothing. Volatility didn't change between those two time periods. Cash didn't change between those two time periods. The only thing that changed was time. We made money on time. Now, people say, well, this is great. I'm sold, provided you can tell me what my risk is on this. Well, how well protected are they? Some people say yes, but you have $10 of risk if the stock goes through the strikes. Remember, going back to the spread, we bought the 500 put, we sold the 485 put. That's $15 wide. Then we go down to the 460 put. That's $25 wide. So we bought a $15 spread and sold a $25 spread. You're thinking to yourself, I have $10 of risk, don't I? Yes, you do, only if on expiration you do nothing. Remember, when we first started out with this position, we were delta neutral on the ratio spread. As a matter of fact, because we own the tail, we'll have a slightly negative delta, which means it'll help us on the way down. When the market's going down on these put broken wing butterflies that we supposedly have risk on, this positive or this negative delta that we have is actually going to benefit us. So how well protected are they? I'm going to show you. It's been our experience through all the traders in our firm that we have much less risk of losing the $10 with the broken wing butterfly than the 70 cents you could have lost had you bought the traditional garden variety everyday butterfly that most people trade. Most retail traders, when they first learn the butterfly, say, you know what, I love this thing. I only have to put up 70 cents of risk as opposed to going out and buying the vertical spread for $3.50. I'd rather risk 70 cents than $3.50. And they start playing with the butterflies. But they start losing once in a while because it's hard to predict where the market's going. As a matter of fact, Random Walk doesn't even try to predict where the market's going. Robert Chastain will tell you that when we teach students, we tell them, if you have a crystal ball that can get you right in the markets more than 50% of the time, great, use it. You're better off than we are. But we're assuming that we don't know where the market's going. And if we don't know where the market's going, it would be a reasonable assumption to say that if I buy a butterfly at some point that's away from the money, that there's a good chance that that butterfly will go out worthless. And so that 70 cents of risk we had, it was a real 70 cents of risk. But if we know how to trade these broken wing butterflies, which is criteria in our materials, shows you how to adjust these things if it ever looks like it could possibly ever have a chance of losing that $10, well, I'd rather make an adjustment before I run into trouble and just roll the position around and break even than risk the 70 cents to buy a traditional butterfly. But I'm going to show it to you mathematically because math doesn't lie. But before I do that, I want to, for those people who don't quite understand this, and I'm sure there's a couple people here that are pure rocket scientists and probably know how to go through the Black-Scholes formula or Cox and Rubenstein's formula way better than I do. But I'm sure there's a couple people who are going to learn something from this little trick here. And I'm going to use this trick going forward to show you how the broken wing butterflies actually make money and how well protected they actually are, and a little bit about the thinking that Random Walk uses and employs when trading these products.